everyone. Today is Friday, July 7th, 2023. I hope you're doing well out there. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 689, where we break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. We're going to jump right into it today with a couple of the headlines, lots to talk about behind the scenes here. But first and foremost, did the bears fumble a breakdown attempt? That is the question I am asking myself. Now, we did get some weakness into the close on Friday, which is maybe restoring a little bit of that bearish confidence, but we had a nasty sort of gap down. The bears had a chance to really take a good hit out of this market, and it seemed like it was a little bit lackluster at best, but we're going to talk about that when we get into the charts here in just a second. We got yields pushing to new multi-month highs. This has been the risk on the table here and something we've talked about in some previous episodes, but we really did get a spike across really all the maturities there on yields. Oil also trying to resolve its consolidation higher. We're going to touch on that a little bit later. And then we got that VIX action. Good spike on Thursday, and then a bit of a rollover here into the end of the week. So we got this, we got more, and we got some charts coming up here in just a second. Stay tuned. All right, we are back here. We've got TC2000 open, and we're going to start off with our overall sort of equity market index view here. And if you are, as a reminder, a Warden TC2000 user, then you got to check out our website. We got lots of scans, tools, layouts, things that you're seeing in this video, and a lot of other things available for download. So check it out at thetraderisk.com. You can see all the TC2000 stuff we've got for you. So let's jump into it here with the 1 week performance. So remember, markets were closed basically a day and a half this week. So volumes, when you're doing your homework and you're looking at your charts on a weekly basis this weekend, we're gonna have light volume across the board because we were closed on Tuesday for Independence Day, 4th of July holiday, and then half day on Monday. So when we look here at the returns, you can see it was a red week across the board. 1%, basically even race here. All of the indices down about 1%. 1 month numbers still positive in the United States. Outside the United States, ACWX is down a little bit here on a 1 month basis. Now, if we scroll down here to volatility, you can see volatility was up this week. We got the VIX 14.91. That's up from 13.59 last week. And we got Nasdaq vol, which is back over 20. So it's 20.55, just kind of hanging out there, a little bit higher than last week, should be noted, but still, generally speaking here, on the lower end of, from a percentile sort of rank here, on the lower end of the last 52-week range. In both of these markets. You can see here the path that markets took this week. You could see pretty choppy, but mostly down, starting in the top left and ending the week in the bottom right. Let's take a look at our sectors here. You can see that it was tough to find some green this week. Most everything was red. A lot of things slightly red. We had real estate at the top of the list. We're going to talk more about real estate sector a little bit later in this video. Everything else was in the red. Communication services was number 2. Utilities in the 3rd spot. On the downside, healthcare, materials, technology. Those were your underperformers this week. Once again, if we look at the 1 month returns for all of the indices here, or all of the sectors, I'm sorry, most things are still positive here. Most things are still kind of experiencing a nice uptrend and now chopping, pulling back a bit, and breathing, so to speak. If we take a look at our trends here for the sectors, so we're looking at our custom smart trend filter that we've built out here. Very easy color-coded read here. Basically, you know, green bullish trend up, that's good. Yellow is kind of the neutral in between state, and then red, of course, is downtrend bearish, and it's using price and volume over time, so measuring that across time both price and volume, and some ways to kind of smooth out the trend here. But when we look across the board here, there wasn't a whole lot of change. I mean, technology here, as you can see in the top left, this went more neutral now, and I'm looking on a daily chart on all of this, but neutral here. So really not a whole lot of cause for concern. Maybe just stare at the smaller time frames and manage risk if you see appropriate. But still, generally speaking, we like to say we give the benefit of the doubt to the prior signal here, which is bullish and up. So we're going to still give technology the benefit of the doubt. Communication services, discretionary, all of those still kind of looking the same here. Financials, industrials, everything, kind of transitioning either to yellow state this week or sticking with the green. The only transition we got was healthcare. And remember, healthcare was the biggest underperformer this week. And you can see we got a fresh red dot here. So a bit of a rollover going on here for healthcare. So pay attention to that on potentially a trend change at hand. Biotech still bearish, nothing new there, and I think everything else pretty much the same. Let's take a look at market breadth here. So when we take a look at bottom of this layout, 52-week highs, 52-week lows. So we like to track this every single week. Obviously, if you're bullish on this market, you want to see these big green spikes. You want to see more green on the screen than red. And you can see here we dried up a little bit. In fact, we actually got more new lows on Thursday than we did highs. So that's something where, again, if you are bullish on this market, if you've got a lot of long-term exposure going on here, you just want to pay attention to what this is looking like. You can see it was a bit more of an even race, a little bit more 52-week highs being made on Friday. So you want to see those 52-week highs continue to dominate, and we'll see how that picks up next week on our first full week of trading for July. Everything up here pretty much the same. Still got an uptrend for stocks over 200 SMA, stocks over 50 SMA. Our dials on the side here, our market gauge dials, you can see that not too many stocks up this week, so it was pretty small advance of stocks up. Volume, obviously everything would be very low because we didn't have that much trading time this week. Let's kick it over to IBD here. So shout out to IBD. They are a sponsor of this show. They make the show possible. So you can find a link in the description of this video. And I'm looking at their digital subscription here. So this is what is home to the IBD 50 and a lot of other kind of cool tables and stock lists. But this is the latest IBD 50. It is sorted, in fact, by IBD 50 rank. So you've got Carnival up here, which is the #1 ranked on their IBD 50 list this week. And I always just like to look at the 1 week performance for this list of stocks because, they tend to be kind of the market leaders, a little bit more of a growth bias. So just kind of getting a pulse on what's moving, what's in demand, what's got those strong fundamentals that IBD is doing the research on. And you can see on the week here, pretty mixed race, but mostly negative. We see Carnival, which is still posting some gains here. 1 month returns, very, very strong. Same thing with DraftKings, eking out a small win this week, although it has cooled off a bit over this past month. And then down the list, you start to move into some red territory here, ELF, and some very familiar ones, Celsius, that have been on this list for a while and have been strong performers over the past few months and year. So shout out to IBD. You can check a link in the description of the show. Support us, support IBD with that link. Now let's move on here to commodities. Commodities here on the week were mostly positive. So oil at the top of the list here, 3.62%, followed by silver, agriculture, gold, all positive this week. You can see that copper was basically flat. Dollar index really rolled over hard into the end of the week. We're going to look at that in just a moment. And then natural gas down 7.5%. So natural gas trying to form a bottom here, but man, is it really just taking its time and chopping traders up in this sort of sideways bottoming formation. You can see here we've got our smart trend filters. Not a tremendous change this week across the board. Most things kind of persisting as they were. Now, the big problem this week was yields. Yields were spiking across the board here. This is something we talked about. I've posted some charts on Twitter pointing this very 4-block chart up actually on Twitter the other week. In the comments last week, we were talking about risks with some of the subscribers and yields. I mean, yields was kind of the only clear thing that I could see that could disrupt this bullish narrative here. We didn't have a whole lot of other reasons to be concerned over the past couple of weeks, besides maybe sentiment getting a little too excited. But yields, in my mind, were still one of the things that were that are a bit of a concern here. And you can really look at all of these charts and potentially envision here, or just kind of see this as a potential continuation pattern where yields spiked and topped mostly in the late 2022 in that fourth quarter, October, November timeframe. We're looking at the 5-year, the 10-year, the 30-year, and most of them have topped out in Q4 2022 and have just been moving sideways. And now you can see that most of these consolidations, again, I don't want to get too technical of doing a hardcore TA on interest rates here, but they are working themselves back up now to these prior highs, and that is a concern if this does turn into another sort of leg higher across the board that is going to put a damper on this equity market mood. That's at least my opinion. If they accelerate, if they continue to rip here. Now the flip side is maybe we get, again, I don't want to do heavy TA on these yields, but maybe we get back up to these October 2022 highs and we fail fast. Maybe we get back up to 4.25%, 4.5% in the 10-year Treasury yield, and then just totally kind of roll over. And that could be the springboard or the top for yields for some time. So there's a couple of scenarios to keep in mind, but generally speaking, big story this week was, essentially just new highs from a multi-month perspective. Now, let's get into some price action here for equities. We're going to start it off with the S&P 500. It's our trusty roadmap here, weekly chart at this time, and this is the cash settled market. So basically here, S&P 500 has been, of course, romping and stomping to the upside over the past four or so months. It's been cutting through resistance pretty just gracefully here and taking it in stride, all of these levels. And the big level that we last cleared above was around this 4280 zone, just under 4300. And in my mind, that's still kind of the big intermediate level to pay attention to. If we can continue to hold above this area, then to me, it's a glass half full environment looking out over the next, month or two, however you want to frame it. But on an intermediate term basis, if we're above 4,300, that's the approximate highs of this range going all the way back to 2022, then I'd say, we're going to give the bulls the benefit of the doubt here. And so when I look at this week, again, short holiday week, lighter volume, inside week got printed, and it looks fairly harmless on a weekly perspective. Now, let's go to the daily chart. And this is where that first kind of top of mind bullet point came when, I basically asked the question at the top of the video here is, did bears fumble a breakdown attempt? And what I mean by that is there were a lot of stocks that looked just like this on Thursday. See if I can get it. And S&P 500 is really not the big culprit, but what we essentially were left with in lots of stocks was this little 3-day island top, and the tops were all coinciding so neat and orderly with the highs here from just about 2 weeks ago. And so you had this perfect scenario of this overnight drop in markets, which could have easily, cascaded lower and saw some aggressive selling pressure in this market. But that really didn't happen. In fact, what you ended up seeing was a lot more of these tails that started to form here, and buyers showed up and drove off of the lows, finished Thursday a little bit higher, and then on Friday's session, well, we tried to go green in the market, but all we ended up doing was kind of filling a gap, and then we had a pretty abrupt sell-off here into the close. So it is a little bit ominous looking. I don't think we can count the bears out just yet, but really what, from a technical perspective is forming here is just a little bit of a range now. And I love ranges as a trader. I think we all should, because they just give us clean levels to measure and manage risk against. And right now it seems like the S&P 500 is carving out sort of a range here between let's call it low 4300s, which is basically the lows from a week and a half ago, up to last week's highs, 4450. So you've got essentially here about a 2.5–3% range from low to high here to kind of measure and map this market for the S&P 500. But these are the levels I'd be paying attention to now. And as we go forward, as we kick off next week, how does the S&P, respond to the extremes here? My guess is we're probably, chopping around, going sideways a little bit here, kind of frustrating the majority before we pick a side. But basically 4450 on the upside, breaking out through there, shows continuation and a move potentially all the way back to the 2022 highs around 4600. And if, of course, we start breaking down below 4330 and 4300, then we've got some problems on our hand. We have a potential bigger trend change at hand. We're not there yet in either situation. So for me, for next week, probably some chop, probably some two-way trading back and forth as this market kind of figures out what it's going to do. So that's my read there on the S&P 500. Nasdaq 100, once again, you got the same thing. We had this gap down on Thursday. Perfect attempt, perfect excuse to sell this market off for all the bears to come out of hibernation. But instead, we didn't get that follow through. We got a big tail off of the low end. And then guess what? On Friday, just to really frustrate everybody, we got a big topping tail here. So we have back to back big tail on Thursday on the bull side. And then on Friday, we've got the tail on the bear side here. So we're still waiting now, again, in a range here as far as I see it in the Qs. Levels are getting pretty clear. Let's use the lows from 2 weeks ago. Let's use the highs from this week. We've got about a 3% range, I'm guessing. Let's see if I can measure this out. About 4% in the Nasdaq 100 from low to high. And let's see how we respond. Russell 2000, filled and held up much better on Friday. I will give the Russell 2000 that. So again, you can see this big ugly gap down on Thursday, drove off the lows, and we did hold up a little bit better here in the Russell 2000 going into the weekend. We were still down 1.37%. It was still not quite an inside week, but it was still, a little bit of a pause here for this market overall. We're still holding above 179. Got to get above 189 though to get that momentum. So that's the read across the board. We did talk about the Dow Jones last week as one of the trade ideas here. I'm sticking with it. Of course, the Dow Jones was down 1.9%, but this is the level here that I want to pay attention to. And when I say I'm sticking with it, I'm still believing that this could be a nice rotation trade if we can get over 345. No position in this right now, but I do think this is still pretty pent up and, consolidated pretty nicely here. And if we can get a move over 345, which we are certainly much further from it right now, then, watch out for the Dow to sort of come alive here. Wanted to talk also about, well, actually, we'll go through the usual order. Let's talk about oil. So oil, as you can see here, already drawn, as we probably annotated last week, has been moving very tight and sideways. This is a weekly chart. Very tight and sideways here. Lots of overlapping bars. And you can see we're trying to start to move up here. And not too far above here is this big down channel that we've been in since topping out in 2022 June time. So watch oil here. This has been a pretty lackluster. It seems like every time it's ready to break out, it gets sucked back into the other direction. So I'm not willing to say this is it. This is the breakout, go, go, go for oil, but it's certainly starting to tip that way. So pay attention to oil here. Daily chart, here's what Friday's session looked. Nice move up. And of course, that got helped by the dollar. Dollar index had a big day down on Friday, down 0.84%, almost 1%. That's a big move for the dollar, heavier volume. And of course, when the dollar goes down, all those dollar denominated commodities tend to do pretty well. So you got oil obviously as a beneficiary here, but don't rule out the fact that it is breaking out, or at least attempting to break out of this 2-month consolidation. So I think that's notable. TLT and rates, we talked about that. We're back to essentially now the low end, actually making new lows here for TLT, going all the way back to November of 2022. So this is basically an 8-month low now that TLT is making. I don't think this includes any dividends or anything in this chart, but you know, certainly pretty ugly here on this rollover. Bigger volume coming in. Right now, just not looking too good. Could reverse, could, you know, get a nice snapback here. It is oversold. It's back towards these lows. So, you know, keep an eye on it for if you're very short-term tactical, but structurally longer term, it certainly doesn't look good on the spillover. IEF, same thing here, really rolled over, you know, last week and is picking up steam to the downside as this gets back towards these lows. So that's it. That's certainly what we talked about at the top of the show with interest rates and yields. And what else do I want to talk about? XLRE. I wanted to bring this up because we did have, you know, I am noticing here just a little bit more resilience going on, weekly chart. And you can see here that real estate sector hasn't been doing a whole lot. It topped out really early January. It hasn't really participated in the market recovery here throughout the course of this year, but it is showing some signs of you know, potential rotation again. It's kind of in, just like the Dow is not really signaling or not triggering just yet, but the potential setup is there. That's kind of how I'm looking at real estate. I do think it looks kind of interesting here if it can start mustering up some more strength over $38. Of course, you can get a little more juice and beta and potentially better just reward to risk ratios if you're going underneath the hood here and picking some individual stocks. There are individual stocks that are breaking out and helping lead better than just the sector ETF is. But regardless, XLRE, I think, is a pretty interesting setup there. I did want to highlight Rivian. Let me actually pull up this layout here. Okay, so I got our rolling returns layout here. So this is one of our custom pre-built layouts that we have in our TC2000 download store. And Rivian, of course, making just a ton of headlines this week. Absolute monster move, 48% to the upside this week, breaking out, clearing 1 month, this 2-month range, 3-month range that it's been in, moving sideways, finally getting above 1580 and really just pushing here. And so when I look at our layout here, this shows rolling returns over a 21-day basis. If we go all the way back to since Rivian IPO'd, we are spiking. We are seeing the most rotation momentum to the upside here over a 21-day basis. Same thing over a 5-day basis, also pushing here. If we're looking at daily movements displayed in ATRs, going kind of topping off the charts here. Volume displayed to 1 month average, going off the charts here. 1 day returns off the charts here consecutively. So lots of positive momentum. Again, I'm not suggesting anyone go out and buy it at these levels. It's certainly had a huge move here. It's nearly doubled in about 9 trading sessions, 10 trading sessions. So, you know, be a little bit cautious here, but it clearly shows the rotation, the capital, the potential longer-term bottom that is now in for Rivian, and a change of, you know, trend for this stock. So pay attention to it. Certainly where a lot of that momentum is hiding out right now. If you want to get a sentiment and a taste for risk appetite in this market, I think this is one of a few stocks out there that are really, really doing well right now and seeing that rotation. Of course, Tesla has, you know, no better king here than this stock over the past couple of months, but certainly is not posting 70% gains in 10 trading days, although, you know, certainly did a fair share of heavy lifting here throughout May and early June. So that's what I've got for today. Lots going on. It was a holiday shortened week. Love to know your thoughts. Leave a comment below. What are you looking at? What are you thinking about this this gap down, these island reversals, these potential island reversals? Most of them got filled on Friday because markets rallied. But what are you thinking about any of the potential weakness that we're seeing in here? Do you believe it? You're lightening up? Let me know your thoughts below. Love to hear it. And as always, I want to thank you for tuning in every Friday. Long form, objective market analysis just like this. Check the IBD link in the description. Check out TradeRisk website for TC2000 downloads and Trading Signals memberships. And I hope you have a great weekend. We'll see you back here next week. Take care.